goes, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli.
And I'm Danny Akuye.
On another positive day today after that record on S&P 500 again.
Absolutely. We've had 2 days now of green on screen. It looks like we're having a little bit of a melt up,
yes,
literally, but we'll take it. And there we go. The CBO 200 up by just over 0.5% or almost 8 points, I should say. And the ASX 200 up by about 37 points and also around 0.5%, Jules. So it's quite exciting.
It is quite exciting. I noted healthcare looking really good. So the big names like Cochlear, ResMed, CSL looking good. BHP, even though it had its update, looking good, as well as some of the smaller players. So as you say, a potential melt up. But let's get to the themes that we're really focused in today. And we mentioned that healthcare happiness there, seeing some good runs.
Well, it's really interesting because last year a lot of the healthcare stocks were absolutely rolled with GLP-1s, and even CSL got dragged into that. But there's quite a few broker upgrades coming through. We've got the ResMed results this week, and it does look like they are turning back into the happy space, and there could be a bit of momentum there.
Yeah, that Ozempic narrative seems to have waned somewhat. Let's talk about the chalk and cheese though too. You and I have both been doing a bit of a drill down into some of these commodities. I was focusing on uranium in particular today, and I know you read that Shaw and Partners report as well. They've got $150 now a pound, their target for calendar year 25 and 26, I think. But at the same time, lithium is really getting hit.
Yeah, there's a lot going on in that space at the moment. So I've written today in The View about the downgrade from effectively the Tesla whisperer, Adam Jonas from Morgan Stanley, who has downgraded the share price target and the earnings in Tesla. And we are seeing quite a big oversupply of EVs at the moment. Plus there's politics starting to enter the fray after Trump won the Ohio sort of pre-selections there. So, because there's concerns that they're going to roll back some of those electric vehicle subsidies. So, two sort of, I suppose, ends of the spectrum, isn't it, Jules?
Yeah.
When we come to secular themes about clean energy and electric vehicles, well, not everybody's created equally at the moment.
But also just the economics of supply and demand, right?
It's a classic.
The glut in lithium, and then the fact that you've got all these geopolitical woes really hitting the uranium sector too. Education woes, when you look at IDP, I mean, this is really interesting. Goldman Sachs saying that Canada changing its intake of international students could really affect this stock, and that certainly played out in the market today.
Absolutely, and we might just leave that there because I think we're going to do a deeper dive with our guest today. So maybe we should have a quick look at some of those sectors and see how they've performed in today's trade. And we have been talking a lot about the banks, and interesting, Judo Bank, stock of the day, we'll come to that later, but that had a massive rally. And it was quite interesting, Jules, because we are seeing, contrary to what the analysts are saying, this big rally in bank stocks. Look at Commonwealth Bank, $115.40. Macquarie Bank coming out with an $8.6 billion raising in Europe for investors. Well, they're going to facilitate into infrastructure funds in the likes of data centres. A lot of demand there.
Absolutely. All right, quick look at the healthcare stocks. We mentioned some of those. Let's see where they're settling. CSL up almost 1%. Gosh, getting close to 300, which is where Cochlear sits. Ramsay up 1.2%, and we mentioned ResMed also looking good today. And there is some of the energy players as well, which are a little bit flat there.
Yeah, absolutely. Now let's have a look at some of those top corporate stories. And BHP, just worth noting that they have updated on their nickel operations. They're pulling back, and that's on the back that the Wyloo pulling their nickel operations. They're not going to have the concentrate to actually supply through to that one. So again, when we're looking at the write-downs and the restructuring in the nickel industry, very much coming to the fore. And as well, Indonesian supply has increased about 40% in the last year, which has been hammering prices.
You mentioned Macquarie Group raising $8.7 billion for this new European infrastructure fund. So investor appetite for some of these tangible assets, from ports and power to data centres, certainly remaining very strong.
And Perseus Mining in focus is saying it will make an off-market takeover offer for Orcor. God,
a lot of tongue ties today, but let's welcome to the COB Martin Crabb from Shaw and Partners. Can we ask you about the uranium call from your team? Or
Yeah. Heinz's gone super bullish. He's gone the nuclear summer. So my colleague Andrew Heinz, who's the head of research at Shawn Partners, also covers uranium. So we've been, I suppose, on this case for a while. It's clear that there is an argument saying that nuclear makes part of the transitionary program. So we can't just switch off oil and gas and coal and switch off renewables. There needs to be some base load in there. So at the COP26, there was a significant announcement made by the nuclear countries to agree to significantly increase their
triple,
nuclear.
I think, by 2050.
So that'll keep it around about 10% of the base load. So there's not enough uranium. So uranium's been in a bear market pretty much since Chernobyl, but definitely since Fukushima. So people just don't want them in their backyard. So lots of countries were decommissioning their nuclear fleet. So that's all turned around now. So it's like, hang on, if it's not just the Chinese that are building them out, if there's other countries going to be building out reactors. And look, they take a long time to come to market, so they're sort of 6, 7, 8 years, which is why Chris Bowen argues that we can't have them in Australia. They just take too long, they cost too much money. But if you've already got the infrastructure in place, it makes sense. Then there's not enough uranium. And also Kazatomprom, who's one of the bigger producers, has got production issues. So they're sort of out of the market. So all of a sudden, when Langer Heinrich comes back on, which is Paladin's mine, they're going to get some good prices for it. So the spot price is over 100. The question is, how squeezy does it get? Because if there's not a lot of supply around, we know there's probably speculative money in that market as well. Could quite easily push it up to that 150 a pound, and stay there for a couple of years. And therefore, the people that are in production now are going to make a lot of money.
It's so interesting because I was chatting with someone yesterday on this, and everyone forgets Paladin was so unloved. Nobody wanted it at 14 cents. And it's a great example of how cyclical commodity markets are. And lithium looks like it's having a really big shakeout. We mightn't hit, the worst sentiment yet, but eventually the survivors, the lowest cost producers, come out the other side, don't they, Martin?
We just see this cycle all the time. And, if you've been around the markets, you will have seen these things a number of times, right? You get incentive pricing where the price goes up so high that it brings new supply on. Then a whole bunch of supply comes on and you've got a glut and prices go to a level where no one makes money. So look at nickel, look at lithium. So 18 months ago, there's no lithium. Everyone's got to do deals to lock up supply. And now it's like we're shutting mines because we can't make money. And even rare earths, which are, by definition rare, $50 a kilogram for NdPr, which is supposed to be like $200 a kilogram not that long ago. So even people like Linus would be struggling to make money at these prices. So we just saw, as you said, nickel mines being shut down. So we've gone from feast to famine pretty quickly, haven't we? So that's the cycle. So do you sell now? Do you use it as a buying opportunity? It comes back to A, your risk tolerance, and B, how much of this stuff you've got in your portfolio. If you've got 10-15% of your portfolio in battery raw materials, it's probably too much. So even though it feels like the worst time to sell, it's probably the right thing to do.
Let's move to education then, and actually going to ask your own question back at you. What beef do Canadians have with IDP Education?
Yeah, what is it with the Canadians? So just a bit of history here. So if you look at English language testing, it's pretty much been done by charity. So there's a group called the British Council, which is a charity that does in a lot of countries, and the Carnegie Institute in the United States. But in Australia, it's been done by IDP Education, which came out of the universities. But they're keen to expand their reach into other territories. So they bought the British Council out of their Indian English language testing business back at the end of 2021, which was just highlighted on that chart there. And one of the big reasons you own that is the India to Canada market. So a lot of Indian students go to Canada, a lot go to the UK, less go to the US because the US is not that big a market, but certainly testing people in India to go to Canada was a big part of the reason for that. Since then, Canada's announced in May last year that they're going to accept other English language testing other than the IELTS, which is the one that IDP owns. So they're only using that one. So they've opened that market up. The stock got belted back in May, if you remember. And then overnight they've said, look, we're getting all these students and there's nowhere for them to live. Gee, that sounds familiar. So they're cutting the quota to 350,000, which is 35% down. Now they've got about 40 million people, so they're a bigger country than Australia, and they're severely cutting back on their student numbers. So that's disastrous for IDP because again, that's a big corridor for them. So they're just getting belted by the Canadians. So I don't know what the management team at IDP Education have done to the Canadians, but they're certainly causing them a fefew problems at the moment.
Yeah, it has bubbled along. But let's switch to macro, because you've got blackout for the Fed at the moment, Martin. But we do have the BOJ today, ECB, BOC tomorrow, and those Fed fund rate cut expectations. Well, everyone's getting a little bit less upbeat, shall we say.
Yeah, well, that was one of the big narratives over the Christmas New Year period, is the market's got ahead of itself. It's assuming that we have, up to 200 basis points of rate cuts. So if you look at back in October, which is probably the high point, which is the green line on the chart there, just showing what the Fed futures curve looked like. So, the market was expecting a hike into 2024, and then sort of a little bit of a soft landing on rates, getting down to about 4.5 by the end of next year. You can see that the black line, which is just before New Year, was the market being I suppose peak optimistic on rates. So not only no more hikes, but we're going to get a lot of cuts, and we're going to be down towards 3% by the end of next year. So that's a 150 basis point move in couple of months. So we're just the orange line is where we are today, and you can just see we're walking back. So the Fed, the voters and the speakers that we've had pre this blackout down here have just been saying, look, you're ahead of yourself. We don't see a need to cut aggressively. We're going to take our time, etc., etc. So we're just walking back on that, and I think you'll continue to see that running into the next meeting, because they're not going to make a change to rates in the February meeting, but they might talk the market down a bit further. So I wouldn't be surprised if we see long end cash futures just drift higher. I think we've still got 130, 125 basis points of cuts priced in for this year. That still sounds too high when you consider the dot plot's only 75.
Yeah, we'll have to remember that one.
I was also curious about this stat you've got. So we're looking at an election year that the S&P 500 has risen in the first 4 months of the year by 0.6% versus 5.6 over the next 8 months. So a rally into the year's end. Yeah,
it's interesting. So being the history nerd I am, I looked at every US election since the 1870s, which is when Robert Schiller his data goes back to 1870. And so every 4 years you get a US presidential election, and it adds a lot to economic uncertainty. Obviously, you don't know who's going to be president. But so one of my colleagues pointed out to me that if you just don't invest in the market in the first 3 or 4 months of the year, that's when all the uncertainty is. So we don't know who is going to win the primaries. We don't know who's standing. And then after sort of 3 or 4 months, you've worked out, okay, it's Biden versus Trump. That's one bit of risk that's out of the way. We know what we're going to get. So obviously, the more risk around the number of candidates you have, the more volatile the markets are. And as you head into the election, which is typically in November of the election year, you get all the certainty, because the polls are usually pretty right. They got it wrong with Trump and Clinton, but they're usually pretty right. So I think the markets for this year, for example, stay out of the market till March or April, and then focus on what Donald Trump's going to do, because he looks like he's going to win. But it's just an interesting historical anomaly that all the money's made in the last 7 or 8 months of the election year.
Indeed.
A big year for elections, Martin. We could talk about Trump.
Half the world is voting this year.
I know, there is
Never
a
happened
lot.
before.
Never happened before.
Yeah.
Oh, I don't know if that's a good or a bad omen. Thank you so much for joining us
Thank
today.
you.
All right, let's have a quick look at the market leaders and laggards, kicking it off with the leaders of the day. Polynovo up over 6%, Arcadium Lithium, Megaport, South32 had a good run, and Aluka Resources as well.
And let's have a look at those laggards. And as we've been discussing, IDP Education off by almost 6%. And interesting, we've got a mixture there between lithium, oil, gold, but basically Genesis Minerals, Bellevue Gold, Karoon Energy and Core Lithium, all off the first three by over 4%, and Core Lithium off by, yet again, another 2.5%.
Yeah, Karoon also lowering its Brazil production guidance for the year. Let's have a look at, again, some of the small cap winners. Frontier Digital up almost 15%. Tabaram, Brockman Mining, Quantum Intellectual and Aspire Mining all in the top 5 as well.
And some of the small cap laggards, Race Oncology down by 10%, And Strickland Metals off over 8%, as was Proteomics. I really struggle sometimes with these stock names.
Proteomics? I don't know how you say it.
Proteomics International Labs off by 8%. In fact, it's an 8% day. And Amero International also off by over 8%.
All right, the stock of the day today was Judo Capital. On the call, our panellists Mark Gardner of MPC Markets and Mark Morland of Team Invest shared their verdicts.
But just with the view that it's probably a long-term play, and but they seem to consistently deliver. And I think on a 3 to 5 year basis, this could be the sort of thing that's at $4 or $5 potentially, because they're growing at a really nice rate. They're very, very disciplined with their capital, and all they've got to do is take a small bite out of the big fall.
So basic numbers anyway yet, but we need another 3 or 4 years. But it looks encouraging,
right?
And if they can manage the loan book and maintain high collection rates and so on, then they'll do well.
Okay.
Okay, we had the two marks there on Judo Bank,
squared.
And it obviously surprised to the upside. So what's on tonight, Jules? It looks like we've got Eurozone consumer confidence, US Richmond Fed manufacturing index, and a swathe of earnings coming out, quarterly earnings in the US. Will be interesting to see. We have had guests yesterday from Alphinity talking about Intuitive Surgical, housing, DR Horton could impact on James Hardie, and also the big Netflix reporting.
Yeah, I hope they don't increase their subscriber fees again. I was looking at an old credit card bill and thinking, gosh, remember when you used to pay not much for Netflix? Anyway, let's have a look at the day ahead here. Westpac consumer confidence across the ditch, CPI in New Zealand, Japan trade balance, interesting after the BOJ today, and then flash estimates for global PMIs. We're also going to get some production updates once again in the materials space, including Northern Star and Woodside.
Okay, and just to round out, we did have that Westpac index, which we just flashed by, but it was actually reasonably good in terms of the business confidence, or not too bad. So, Jill, should we check out the market, see how they've closed for the end of the day?
Yes.
SIBO up 8 points almost, or 0.5%, and ASX 200?
It was up 37 points, or 0.5%. 7,513, so a pretty good day on the back of course, that record run once again on the S&P 500. What will tonight bring us with all those earnings? Well, of course, we'll stay updated on all of that and bring you all the fallout tomorrow morning. We're live from 10 a.m. Eastern.
Absolutely. We'll catch you then.